Good morning, Stephen Whiteside here with today's edition of Stock Market Timing Television for Monday, February 3rd, 2014. We're coming up to 8 a.m. on the East Coast and things are fairly quiet. Stock index futures are flat, energy's down a little, and gold is up a couple of dollars in the pre-market on Monday morning. So we're looking for a quiet open at 9:30. Now, with the markets closing down in January, led lower by the Dow, a lot of people are referring to what's called the January barometer that states as the S&P 500 goes in January, so goes the year. And that worked very well in the last century. Hasn't worked that well in this century, probably because of all the aggressive Fed intervention in the markets this century. Things like this, I find them very interesting. I love them. I love seasonalities in the market. I love anything like that. But I make my decisions based on what the charts are doing, not what I expect the charts to do. And so right now, things are holding up fairly well. We're starting to get some weekly sell signals, but the market hasn't started to break down just yet. Another thing I was watching, if you watched our big picture video at the start of the year, one of the things that I was referred to was the fact that margin debt is at a major peak. And yes, it could keep going, and it did in December, but this is the time and place where markets usually turn down and head lower. And the bull market that we're in right now has been running for a long time, and it's got to take a break at some point. And with margin debt continuing to rise, this is the time and place where we would look for the market to roll over. Let's move on and take a look at some of our weekly charts. We saw the VIX continue to rise last week. Of course, that's negative for stocks. The Dow and the S&P 500 are on weekly sell signals as of last Friday's close. We're still waiting for the other indexes which have performed better than the major Dow and S&P 500 index, such as the NASDAQ 100, the Russell 2000, and the Zacks Microcap. We're waiting for those indexes to generate sell signals, and that would happen this Friday if we closed below last week's low for any of those indexes. Now, the XAU is still on a buy signal, no change there. We continue to see bonds move higher, and of course that's negative for stocks. U.S. dollar had an inside week last week, so fairly quiet. Fairly quiet in the Japanese yen, closed slightly lower. A close above 98.03 would give us a new weekly buy signal for the yen, and that would be negative for stocks. Gold, still waiting for a buy signal there, 1261.90. A daily weekly close above that this Friday would give us a weekly buy signal. Still optimistic for gold. The pros are still coming back. If we do get a buy signal, then we were expecting a move up to 1375. That would take us up to the moving averages. That would take us up to the flypaper channel, and that's probably as far as we would expect to go at this time. Next up, let's take a look at some daily charts. And one of the things you have to be aware of right now is there's something controlling the market. It happened on Friday. It's going to happen today and tomorrow. And that's called the end-of-month bias. And the end-of-month bias is actually bullish. And so when the market is negative, the bullish bias can help prop the market up. Even if the market closes lower, it's still propping the market up. And the reason that there's a bullish bias to the market at the end of the month and the start of a new month is there's a lot of automatic money comes into the market. And that money can come from pension funds, and it also comes from personal retirement accounts. And so if you've ever had a deduction taken off your paycheck at the end of the month for a pension or a retirement account, that money flows automatically into the stock market right at the end of the month and the start of the new month, the first couple of days. And so even if the market is negative, there's that hand underneath of new money flowing into the market to hold it up. And so I'm not expecting a major breakdown in the market on Monday or Tuesday. So if we are expecting a positive bias for the first couple of days of the week, then we're not expecting the VIX to be able to break out above last week's highs. If we want to see the market turn higher, we need it to start trading down below 1485. Where did we stop last week? Well, 1875, of course, was our mathematical target. It was also the bottom of an open gap, and so we've got a little gap there. If we can take out that gap, then 2031 and 2188 would be our next targets to the upside. And of course, if we start doing that, then we're assured of taking out last week's lows. Now, something that's negative for the stock market is money continues to go back into the bond market, and that is certainly a safety trade. And if that safety trade continues, then we're not expecting the stock market to be able to go much higher. Now, money went back into the U.S. dollar last Thursday and Friday. We're back up at previous resistance that we've seen since November. If we can take out those highs, then a move up to the September highs up at 82, 81 would be our next target. Looking at the S&P 500, on Friday we couldn't take out Thursday's high. That would be the first sign something positive is happening this week. We need a close above 1816.78. That level is going to continue to move lower throughout the week. The pattern that we're looking at here, we are looking at what's called a bear flag, and that is a bearish market signal. And so what we're expecting to do is break out below the bottom of that flag, and the next target to the downside is 1750. If we take that out, then 1875 would be a great place to stop, and that would be at the September highs. And for those people watching moving averages, last week we traded between the 50 and the 100-day moving average, finding support at the 100-day. If we take that out, the 200-day is continuing to move higher towards the 1875 level. Now, some of the other indexes that are performing much better than the Dow and the S&P 500, such as the NASDAQ 100, they're holding the 50-day moving averages, clustering around them. If we can take out last week's low, then we'd expect to find support at the 100-day, and of course, if that doesn't hold, a move down to the 200-day. Now, bank stocks closed at their low of the week, and of course, if the bank stocks take out last week's lows, that would certainly be negative for the overall stock market. Some sectors, such as energy, took out last week's lows on Friday, so that's not a good sign going into the end of the week. And people who watch the chip sector are fairly optimistic at the moment. We haven't taken out those lows from the start of the week, and we're still on a sell signal here, but trading up into the channel. So trading in the channel is a neutral zone. So even though we're on a sell signal, that's neutral. And another thing that's neutral are gold stocks. They came down to the lower channel line on Friday, but did not close there. So a close below last Friday's low would give us a new sell signal on Monday. Next up, let's take a look at commodity ETFs, and we saw copper continue to move lower on Friday. A little bit of buying in gold. Still haven't given up hope on gold just yet. The pros are still in control. If gold's going to turn around, we're certainly going to need to see platinum turn around first, and that hasn't happened just yet. Closed lower on Friday, but certainly off the lows of the day. Silver still a drag on the precious metals complex, no change there. Looking at energy, we saw a bearish reversal on Thursday for crude oil. Moved up to the top of the open gap, filled the open gap, and reversed. We're still trading above the upper channel line right now, so not a major concern on Monday. Looking at gasoline, we generated a sell signal on Friday. And looking at natural gas, traded back into the channel on Friday, closed above it. We still need to close below 22.77 to generate a sell signal on Monday. Let's finish off this morning's presentation taking a look at some of the 60-minute charts. Looking at the VIX, you can see we've got a really nice range here. We've got last week's highs, last week's lows. A breakout of the range should be the first sign that something new is happening. The first positive sign for the market on Monday is going to be an hourly close below 1722 on the VIX. Looking at the S&P 500, we're still below the flypaper channel. That flypaper channel is going to act as resistance if we start to head up from here. Also, those moving averages, and you can see where we've got the 50, the 100, and the 200-hour moving average. We still have to get over the 50, but all of those are going to present resistance on the way up. Last week's range, 1798 on the upside, 1770 and change on the downside, so a 28-point spread, and we're right in the middle of that at the moment. The first sign of strength for the stock market on Monday is going to be an hourly close above 1791.28, and we're nowhere near that in the pre-market on Monday. Okay, folks, that's all for Monday morning. I'll be back tomorrow morning to look at the Canadian stock market, and I'll be back on Wednesday morning to look at the U.S. stock market. Have a great day, and we'll talk to you again soon.